Welcome back, welcome back. Okay, so on this video, I'll be pretty much critiquing you, um, just making sure that everybody is doing everything correctly as far as your technical analysis. Your charts are looking correctly. I used to do these critiques based off of one-on-ones, but they take up a ton of time, hours of my day. So I mean, this right here is going to be pretty much going over everything that I go over on those, as far as are you drawing your supply and demand zones correctly? Are you doing your fibs correctly? Does your chart look on point? Does everything line up as far as your ADX, your what else? What else? How clean your charts look? Is everything organized? So I'll be going over everything on this, just like I go over on the critiques that I used to do. So main thing. Whenever most of the time, like when you guys first open up your trading view accounts, they have on the volumes, like which come on the bottom. Um, Pretty much to exit those, you click this icon over here. You press the X button, the close buttons on those indicators that we're not going to even use, honestly. Next, also, you might have a buy and sell type of tab like right here. Just right click on that and press hide. Okay. Next, go on your properties and go on events and alerts and make sure this is turned off as well. Majority of times when you first start, it's going to look kind of like this at first, have all these events over here. Just make sure this is turned off. You don't really need those, honestly, because you can always go on Forex Factory or some kind of like that. When it has this on it, it looks very, very cluttered. So you want a clean chart. Okay. Next thing is to when you have on your ADX. So ADX, pretty much you right click, you insert indicator, and then type in ADX, and it's going to be this one right here, ADXDI. Make sure that it's set up like this for the style. Make sure it's not too thick, not too thin. I want to max, so, whoa, what the hell happened? Sorry. I want to max, so pretty much I want it not too thick, not too thin. And to make sure I do that, try to put it on either 2 or 3, depending on the kind of computer that you have. Every computer runs differently, so I mean, I just want mine's a nice enough thickness that makes sense. Like I'm not gonna put it like super thick that everything just looks super cluttered, honestly. So I like a clean chart. I'm put on 3. 3 is it fits me the best. Make sure this right here says 20. This right here is your main line as far as like that holy grail line, you could say. That's the line that pretty much, if it crosses over it, that means it's a big move happening or it's an extra confirmation towards a certain movement within the market. Okay. Next, so the first thing that I go over on the critiques is your top-down analysis. Make sure that you guys do all that correctly. So that's how we're gonna start it. Start off on the daily chart actually. Daily chart. And whenever I say only mark whatever is relevant, what I mean by that is pretty much whatever is to the right of price, right? So see how price is right here? Everything to the right side of it is relevant. Like, so pretty much you could circle within this big section right here. So everything to the left of it is relevant to where price is now. So that's what I mean by relevant. So look left, and then everything to the left of where price is now is relevant. That's what I mean, relevant. Okay? So what you do is start off on a daily chart, get your line chart out, and the main thing that I'm looking for within this is major areas that you see as far as indecision. This is what I went over on support resistance HD. Okay, so what I'm looking for pretty much is these areas right here. See how the market pretty much spiked down and hit these key areas. So support, resistance. So pretty much this area right here is a definite area you have to take in consideration because it's area where price had a lot of indecision at, and it's gonna keep on having that indecision within the future also. So you got to mark that up as well. Okay, so since price is right there, I could mark up certain areas that's over here. I'm just looking for these key areas of supports, key areas of resistance. See right here, pretty much it got respected, over here, respected. So when market drops down here, I'm looking for some kind of indecision Either it breaks it, look for a retest. You know, there's so many things that could happen within this area right here. So I gotta kind of mark that off just so I could keep track of it. Okay, so look for a few more areas before we go on. Since price is all the way up there, like I'm not gonna really do too much. I just want you guys to get a concept of how everything works. So see, like right here, support, support, resistance, 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 a little bit of resistance. So when price comes down to here, it's another area that you have to take in consideration also, just to kind of keep an eye on it. Okay, and we can go a little bit higher if anything, just so we make sure that we catch all these key areas within the market. Okay, support, support, a little bit of support, broke right there, resistance, 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 resistance. So key areas. Okay, and if you guys wanted to go a little bit lower, you can. Remember, whatever is relevant, guys. You don't want nothing to look too cluttered. Okay. All right. After that, I go on the 4-hour chart. So the 4-hour chart is green. It's a green horizontal line. Everybody that does it with a friggin' this bright ass green, it doesn't make sense. Honestly, it looks very ugly. It's very sloppy. Get the darker green down here. Okay. That's what we use for the H4s. Okay, and keep in mind, write this one down. So between each daily support resistance, there's either 1, 2, or 3 max H4 supports on the H4 resistance. Okay, so it's pretty much going to be 3 or 4 green lines in between these areas that are considered as major key areas that's on the daily chart. Okay, so let me find some more areas on the H4. Okay, so support right there. Over here, it acted as resistance, so keep that in mind. Okay, so over here, resistance, it broke, resistance, support, resistance, and a lot of indecision where price is now. So that's why price is pretty much acting very, very weird within this area right here, because it's hitting one of these key areas. So you have to keep that in mind. Okay, and guys, always try to make your charts look like whole. Like try to catch as much of the chart as possible. Don't zoom in too much. Don't zoom out too much. Use your own judgment. You know, honestly, it's common sense. Okay, like on certain things, it's a lot of common sense. Okay, find these key areas. Key areas. A lot of indecision. Okay, as you can see, look left, all the way to right. Look left. Support, support, resistance, 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 support, support. Okay, so that's a key area. If I could find another area, that'd be great as well. Okay, so acted as support, support, resistance, resistance over here, support also right here. Okay, so now let me just catch a few more before we move on. Okay, look left, look right. Resistance, support, resistance, resistance, resistance. It's a key area. Okay. Okay, what else? Look left, look right. Support, 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 resistance, 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 resistance. Okay, that's key areas. And you don't want to put too much. You know, trust me, it's common sense. Just use your own judgment in certain things. And this right here is a lot of judgment that you have to use. So I acted as a little bit of resistance right here. Resistance, 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 support right there, resistance, support right there. Okay. This area on the bottom, you don't really have to touch too much because price is nowhere close to there. So I mean, you don't even have to really bother it. Now on the hour chart, the key things that I'm looking for on our chart is you have to really get into details of the market, guys. Details, details, details. Okay. So how we find these details pretty much is these major swings, as far as these major areas like this right here, like these major swings where a lot of wicks are. So what I'll be doing pretty much is finding the median within these markets, and I'll be finding that by not hitting the top of the wick not the bottom of the wick, but pretty much find an area where all the candles, all the wicks touch on this H1 H1 resistance. So now look, if I look to the right side, it acted upon some kind of way over here. So it broke. I'll be waiting for that retest and take it on up. Over here once again. So I'll be looking for areas like this right here. I wouldn't be putting all the way down here, but not all the way up here, but pretty much in the median where it touches the most amount of candles. Once again, the median where it touches the most amount of candles. Respected, respected. And pretty much doing this, guys, is give you more awareness of the future of the market overall. And that's what trading is all about. Just you being aware of what's possible in the future of the market. You know, that's the main thing. You just being aware. Okay, maybe catch the most amount of. I'll put it right there. It touches all candles. It didn't break, so that's perfect. Look to the right. Respected. A little bit of respect. Respected. It broke. Came back up. Retest right here. Dropped. Perfect. So those are the key areas that I'll be looking for in this market right here. In this area as well, I'm pretty much looking for. Okay, so not this top wick, but pretty much an area where it all touched. You know, to the right, respected, 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 respected. On a lower time frame, I'll be looking for a break. I'll be looking for that retest in some kind of way or form, and then getting on that drop. Okay. Once again, I can mark up some more areas right here. We're not the lowest one, not the shortest one. We're pretty much in the median where it touches a good amount of wicks on the area that it's in right now. So it's all about just being aware, guys. So the next thing that I ask you guys to do on the critiques are mark off your supply and demand zones. Okay. Remember, supply and demand zones I'm looking for on these major key reverse areas of the market. Like, see how it pretty much reversed down hard right there? It's a key area, a swing. Swing right there, it reversed. Swing right there, it reversed. You know, I'm looking for these major areas right here. And how I draw my supply and demand zones. Like I showed you guys before, previous wick. Remember, all technical analysis is done on the hour chart. Let me write it down. All tech is done on the 1 hour chart. Fibs, sup dem, supply and demand, trend lines, and what else? I think I think that's about it really. But basically, all technical analysis is done on the 1 hour chart, guys. 1 hour chart. I don't want to see you guys on a 4 hour chart, 5 hour chart, 6 hour chart, whatever. All technical analysis is done on a 1 hour chart. Remember this. Okay? So supply and demand, I'll be looking for on the major swings of the market. Previous wick, breakout candle's body, drag it across. Remember, everything I do is for a reason, guys. Previous wick, breakout candle's close, which is this is considered as a breakout candle because the charts went which way, up or down. Went to a downtrend, so the breakout candle is going to be on a bearish candle. All right. If it was on an uptrend, I'll be looking for the second candle to be a green candle. This right here, the second candle is going to be a red candle because it went on a downside. Okay, drag it across. Okay. Remember, it's all about just you being aware of what's possible in the future of the market, guys. Okay. Once again, previous wick, breakout candles close, drag across. Shoot. Zoom in. Previous wick, breakout candles close up there. So the previous wick is going to be that red candle. See how it went on the upside? The breakout candle is going to be a green candle because it went on the upside. Okay? 2 candles creates a supply and demand zone. Okay? Once again, up here, it was a swing. It dropped heavy. So it dropped in which area? Down or up? Down. So the second candle is going to be a what? A bearish candle. Drag across. Previous wick, close of the breakout candle, drag across, close. What I'm looking for on supply and demand zones is pretty much the retest right here. This right here is what you're looking for. That retest. That's the last kiss. That retest of a supply or demand zone after a certain amount of time. Like right here, I draw my zone. I'm looking for a retest of that zone. And seeing that there's confluence within this area right here, seeing that there's a H1 support, that's two confirmations as to why the market will be possibly reversing within when it hits this area right here. So that's confluence, guys. Confluence trading. That's my trading style, confluence. Okay. Let me mark up a few more areas for y'all. So right here isn't much, but at the same time it is a zone. Previous wick, breakout candles close, drag across. And don't ever make a supply or demand zone. I repeat, don't ever make a supply and demand zone cut price. Like, I wouldn't put it through here. It cuts price. It doesn't make sense. It doesn't make sense. Once it breaks price, it's irrelevant. Okay? It's irrelevant once it breaks price. That's very, very important. Don't ever make it break price. See how, like, on all my zones, it's on the outskirts of the market every single time. The outskirts. The outskirts every single time. It's never in the middle or any of that. It's on the outskirts of the market because it's where the major swings of the market is. Okay? So that is supply and demand zones. Okay, now with fibs. Okay, with fibs, make sure that your fibs are all marked up correctly. Make sure that you guys have these points on here. 88.6, 0.886. Negative 0.27, check off 1.27.2, wait, 1.272, I mean, make sure this right here says right, make sure the background is clicked off, make sure extended lines is checked off, make sure percents is checked off, okay? That's it. So now when I'm checking with my fibs, all I'm looking for is, with fibs, I'm measuring the retrace after the big move happens. Point blank. That's what fibs are for. It's retracements. So if I did from my swing high to my swing low, I'm measuring everything that happens on the right side of it. Okay? That's what fibs measure. They measure retracement. So if I was supposed to measure this from up here to down here, I'm measuring how much percent did the market retrace from this move right here. This right here is the move. Market retrace. That's what I'm measuring. That's what fibs measure. Point blank. Okay? So now if I was supposed to take a few trades and everything, counter trend trades or whatever, pretty much I'm looking for the market to hit these PRZ levels. First PRZ level that I'm looking for is 38.2. Second one I'm looking for is 61.8, then 78.6, then 88.6. If I was supposed to say trade this counter trend right here, seeing that the market is creating these lower highs, lower highs, lower highs, lower highs, lower highs. And this level right here, pretty much, it didn't break up like a higher high, so it's considered as just one level. It's one solid square, actually a rectangle formation because it didn't break out of this area. So, like right here, pretty much I've been measuring this counter trend. It broke 38.2. So what I'm looking for now is the market to push to 61.8. That's second PRZ level. Market came up fully to 78.6, which is another PRZ level, and then dropped. Okay, within this area right here, if I was trading it, I'd be looking for confluence, and like confluence alone, pretty much, this is when pretty much the multiple confirmations, and when you actually spot an area where you actually have a support and resistance area based off the daily chart, H1, H4, and it lines up perfectly with your fibs, which is confluence, and those areas in the market are very, very powerful. You're going to see them all the time and everything. So if you mark up your fibs and it kind of aligns with a support and resistance area based off the H1, H4, or daily chart, it's called confluence. Those areas are very, very powerful. So when you see one of those, trust me, look out for it. All right. Once again, swing high, swing low, swing high. I mean. So once again, all right. So this right here was an area of a lot of confluence. As you can see, H1 support, And this right here is a demand zone because on the bottom. Supply is up top. Supply is always up top. Demand is always on the bottom. So pretty much, supply and demand is, as you guys may know, like by now at least, what you must know. Supply is like another version of resistance. Demand is another zone, another another form of support, but pretty much a broad version. It's not just like one single price. Like, see how like support resistance is just one price? Supply and demand is a range of prices that a market is going to be reversing at, or it could possibly reverse at. So if I was supposed to measure this right here, I'm seeing that there's like a lot of confluence within this area right here. It's at a 38.2 mark, which is the first PRZ level. It's at a demand zone. This has H1 support. So that's three reasons why the market is respecting this whole area right here. This whole area. It has three confirmations, three very strong confirmations. And those are the key areas that you want to trade in, because when you have those, it's the market is stopping at that area for a reason. Everything lines up for a reason. Okay, so that's what you're measuring when the market does this kind of setup right here. It has a lot of confluence trading. That's the main thing. And if you guys were supposed to draw your let's say trend lines pretty much, like I said before, it's from basically the first 1 to 2 to 3 wicks in the market, and then drag it on up. Let me mark up some strong ones for you guys. So this area right here, 1 wick, 2 wick, and drag on up. There. One wick, 2 wicks, and then drag into the future. So 1 wick, 2 wick, drag into the future. 1 wick, 2 wick, drag into the future. 1 wick, 2 wick, drag into the future. So this right here is considered as a channel. From there, so once price pretty much broke right here, look for that retest and drop. Broke out of the channel. So that's a very, very strong indication for change of a trend, because this right here is a buyer zone. Once it broke, look for that retest, that major retest, and then drop. You know, and possibly if you put on your fibs, who knows what you can find also. But you gotta do all this ahead of time, guys. Ahead of time. So this right here, see how 78.6 lines up with that H4 resistance? That's confluence. So you're looking for like either a reversal or some kind of rejection within this area right here. As you can see, that's what happened. You know, so that is supply and demand. That is fibs. All technical analysis based off the 1 hour chart. And yeah, so make sure, guys, while you're doing your critiques, make sure everything lines up perfectly. Technical analysis is done very, very carefully. Don't rush it. Your markups is your blueprint. Okay? And when it comes to ADX, you'll be only trading when the market is in either a bullish market or a bearish market. Whenever black, hold on, let me write this down for you guys. So ADX, and this is over the 20, over 20. Black, black and red, over 20. Black and green. So this right here means a trending bearish market. This means a trending bullish market. And whenever the black is under, that means it's non-trending. Okay, so whenever black and red is over 20, that means it's a trending bearish market. Whenever black and green is over 20, it means it's in a trending bullish market. If it's consolidating, it's pretty much in a range. It's not. It's like going crisscross. It's not really um over like more than one another. You could say it's like this right here. It looks just like this. This right here is when a market is very choppy. It's not really going anywhere too much. In this kind of market that you wouldn't want to trade in too much, honestly, unless you know what you're doing. Okay, so keep this right here in mind. ADX over 20, black and red, it's a trending bearish market. Black and green over 20 is the trending bullish market. Black is under means non-trending overall. And yeah, and to measure your price, you click right here. Click this one right here, date and price range. Click it, and then you can drag it, and you can measure the amount of points that the market moved, the amount of bars, how long it took, everything else. Okay, I'm trying to remember what else am I asked pretty often on critiques. What else? What else? Yeah, but I think that is about it, guys. So yeah, guys. So this right here has been the critique. This is after all your training. This is going to be on phase three. After Confluence and everything else. So make sure, guys, you take your critique seriously and touch upon everything as far as technical analysis wise. Is very, very important. And yeah. So that's about it, guys. So happy trading, and see you guys on the next video.